Personal finance. Ugh. Sometimes it can feel like, I don't know, like a big jumbled mess. You know what I mean? A bunch of jargon, confusing advice. But what if there's actually a way to figure it all out, to crack the code, to, actually feeling good about your money?
Well, that's exactly what we're going to try to do today. We're diving deep, deep into mastering personal finance. It's called the key to financial freedom. And our goal, really the mission of this whole deep dive is to kind of pick out the stuff you can actually use so you can start building a life where you really feel good about money.
Yeah, I got to say, this source, it promises like a life without money stress. I mean, who wouldn't want that, right?
Yeah, totally.
Think about it. Reaching your goals,
Yeah.
like finally buying a house or traveling or even like retiring early.
Early retirement.
That's the dream.
And that's what we're going to break down, like clear steps, things you can actually use. One of the most interesting things about this source is it doesn't just like throw advice at you. It actually talks about like the psychology of money, like why we do the things we do with our money. And it gives you strategies to get past, I guess you could say, common money mistakes.
So, okay, let's unpack this thing. It breaks down personal finance into 5 main areas. Budgeting, saving, investing, dealing with debt, and then planning for retirement. It's like, okay, we're building a financial house, right?
Yeah, I like that.
Each one of these areas, it's like a crucial building block.
Yeah. And what's really interesting is that if you kind of ignore even one of those areas, it can like mess up your whole financial picture, like a chain reaction. Like, let's say you ignore your budget. That can lead to, overspending. And then that impacts how much you can save, how much you can invest.
Yeah, it's all connected.
Yeah.
So let's get practical for a second. What's the first step? Like if someone's listening and they're like, okay, I'm ready, I want to take control, where do they even start?
So the source really stresses that you got to understand where your money's going right now, like right now, today. That's where budgeting comes in. But it's not just about like tracking every penny. It's more about making choices, like conscious choices that line up with, what you care about, what you want in life.
The source mentions a few popular budgeting methods like the 50-30-20 rule. Although I've always felt like that one might be like a little outdated.
I think you're right to question that. It is a good starting point, but research shows that, maybe adjusting it, like a 40-30-30 split where 40% is for needs, 30% for wants, and then 30% towards savings and paying down debt, that can actually help you make progress towards, financial freedom much faster, especially now with, the economy the way it is.
That makes sense. It's like a boost for your savings.
Exactly.
The source also talks about zero-based budgeting, which is like you give every dollar a job. Have you ever tried that method?
I have, and it can be really empowering. It's like you're taking control, like every dollar is working towards something you want. There's some pretty cool apps out there that can help, like YNA. You need a budget. It's pretty popular.
Okay, so there's like a budget style for everyone. I like that. But even with like the perfect budget, things happen, right? Unexpected expenses pop up.
Oh, for sure.
And that's where the emergency fund comes in, right? The source says you should have like 3 to 6 months of living expenses saved up. But I know like for a lot of people saving that much, it just seems, I don't know, impossible.
Oh, yeah, absolutely. It can be daunting. But, here's a little secret. You don't have to do it all at once. The source suggests starting small, even just like $20 a week, and setting up like an automatic transfer makes it painless.
I love that. Like you're sneaking those savings in before you even, have a chance to miss the money. But what about people who are like already dealing with debt? That feels like that can feel like a huge roadblock to feeling good about your finances.
Yeah, you're definitely not alone in feeling that way. A big chunk of this source, it focuses on dealing with debt. And it really stresses like tackling those high interest debts first.
It talks about the avalanche method and the snowball method. Can you remind us how those work?
So the avalanche method, it's all about efficiency. You basically focus on the debt with the highest interest rate. You pay that down as fast as you can while, making minimum payments on everything else. And that way you end up paying less interest overall.
Okay, so it's like a strategic attack on the high interest stuff.
Yeah, exactly. Now, the snowball method, it's more about staying motivated. So you start by paying off your smallest debt, no matter what the interest rate is, and then you kind of build momentum. You get that feeling of accomplishment.
Okay, so it's like finding the method that works for your personality,
Yeah.
keeps you going. I
Yeah.
like that. But even with, your budget figured out and your debt under control, saving and investing, it can feel really intimidating, especially if you're like new to it. What's a good place to start?
One of the things I found really insightful in the source was this idea of starting small and taking advantage of compound interest. It's really powerful. Even if you can only invest, a little bit each month, the key is consistency. Over time, those small contributions, they can really grow a lot.
And the source mentions index funds as a good option, especially for beginners. Can you talk about why those are so beginner friendly?
Sure. Index funds are they're basically like baskets of stocks, and they track like a market index, like the S&P 500. So it gives you instant diversification, helps spread risk, and they're usually low cost, which makes them accessible for even if you're just starting out and you don't have a lot to invest.
Okay, so it's like you get a taste of the whole stock market without having to pick like individual stocks.
Exactly.
Takes the pressure off.
Yeah, it takes the pressure off.
We've covered a lot. Budgeting, saving,
Right.
managing debt, investing. Feels like we're building a good foundation for financial freedom.
I think we are. And there's still so much more to talk about. The source also gets into, how to protect the wealth that you build. Things like insurance and estate planning, which a lot of people overlook, but it's really important.
Yeah, it's like you build this financial house, you want to make sure it's protected, if a storm comes along.
Exactly. We're going to dive deeper into those topics in the next part of our deep dive. But before we move on, I think it'd be helpful to kind of look at some of those common money mistakes, the things that can really trip people up.
Okay, yeah, let's hear it. What are some of those financial, I don't know, faux pas? What are the things that we all do? All right, lay it on me. What are those money mistakes we're all making?
Okay, so one of the biggest ones, and the source really hits on this, is not tracking your spending. Like, it's so easy to fall into this, like, I don't know, invisible spending trap.
Invisible spending.
Yeah, it's like those little purchases here and there, they add up so fast, and you don't even realize it.
Oh, I'm guilty of that. It's like the latte factor or
Sure,
whatever.
but the thing is, you don't have to, like, completely deprive yourself, You can still enjoy those little things. The key is to be mindful. Like, ask yourself, okay, does this purchase actually line up with what I really care about with my goals?
So it's about being intentional.
Right.
Okay, what other mistakes does the source point out?
Another big one is putting off retirement planning. It's easy to think, oh, retirement, that's like forever away. I'll worry about it later.
Yeah.
But the truth is, the sooner you start, the better.
And this source, it really stresses that whole compound interest thing.
Yeah.
Can you explain what that is and why it matters so much for retirement?
Yeah, compound interest, it's basically interest earned on interest. It's like, like a snowball rolling down a hill. It gets bigger and bigger. So the longer you have your money invested, the more potential it has to, like, really grow.
So even small amounts,
Yeah.
if you start early, they can make a big difference down the
A
line.
huge difference.
That's good to hear. The source also, it warns against relying only on your salary. And I think that's something a lot of people can relate to, especially, these days.
Oh, absolutely. It's more important than ever to have, multiple streams of income, like maybe look into side hustles or freelancing or even investing in stocks that pay dividends.
Okay, so it's like creating a safety net.
Exactly.
Speaking of safety nets, let's talk about protecting like the wealth you build. The source talks about insurance and estate planning, which always feel, I don't know, kind of overwhelming to me.
Yeah, I get it. It can feel like a lot, but think of it this way. Insurance and estate planning, they're about protecting the things that you value most, financially and emotionally.
So it's not just about the money. It's about like peace of mind.
Exactly.
Can you give us a quick rundown of like the types of insurance we should consider?
Sure. So the source really focuses on these three main types: health insurance, life insurance, and property insurance. Health insurance, it's there to protect you from, those crazy medical bills. And then life insurance, well, that provides for your loved ones if, something were to happen to you. And property insurance protects your home, your belongings from, like, damage or theft.
Okay, so it's like having a shield basically against whatever life throws at you.
Right.
What about estate planning? That always seemed like, I don't know, something only rich people need to worry about.
A lot of people think that. But it's really not true. Estate planning, it's for everyone. Doesn't matter how much money you have. It's basically just making sure that, your assets, your stuff is taken care of the way you want. If you become incapacitated or if you pass away, it involves, setting up things like a will, a power of attorney, a living will.
So it's about taking control and making sure your loved ones are taken care of. I never really thought about it like that. This source, it really covers a lot.
It does. And it's not just information. It gives you like practical tools and resources to actually like put this stuff into practice in your own life.
I'm really interested in that section about additional financial tools and resources. Can we get into that?
Yeah, definitely. One of the things that stood out to me was exploring high yield savings accounts for your emergency fund.
I've heard of those,
Yeah.
but how are they different from like a regular savings account?
So high yield savings accounts, they usually offer higher interest rates compared to, traditional savings accounts. So your money, it actually grows a bit faster.
So you get like a bonus for just choosing the right account.
Exactly. The source also mentions money market accounts, which are, they're similar, but sometimes they have like higher minimum balance requirements.
Okay, so there are options.
Yeah, lots of options.
The source also talks about retirement accounts,
Mhm.
specifically 401ks and IRAs. Can you break those down?
Sure. So a 401k is a retirement plan that's offered through your employer. You can contribute part of your paycheck before taxes, which lowers your taxable income, which is nice. And a lot of employers, they offer matching contributions.
That's like free money.
Yeah, exactly. And then there are IRAs, individual retirement accounts. You can open those on your own, even if your job doesn't offer a 401k.
So you have more control over your retirement savings.
Right.
But the source, it mentioned different types of IRAs.
Oh, yeah. There are two main types, traditional IRAs and Roth IRAs. With a traditional IRA, your contributions, they might be tax deductible. And you don't pay taxes on the money it earns until you withdraw it in retirement. But with a Roth IRA, you don't get that upfront tax deduction. But when you take the money out in retirement, it's tax-free.
Oh, so it's like you can choose your tax strategy.
Right. Pay now or pay later.
That's really helpful. I feel like I'm starting to understand this whole retirement account thing a lot better.
That's great. And don't forget, the source, it gives you a whole bunch of other resources like books, podcasts, online courses, all sorts of stuff to learn even more about personal finance.
It's like having a money mentor right in your pocket. We talked about so much today: budgeting, saving, investing, protecting your money. And that one area we touched on earlier, managing debt, I'd love to explore that a bit more.
Yeah, let's circle back to that. We talked about the avalanche and snowball methods, but there are actually even more, tools and techniques you can use to get rid of debt and reach that financial freedom.
Okay, so debt management. Let's dig into that.
All right, so we talked about avalanche, we talked about snowball, but this source, it also mentions something called debt consolidation.
Debt consolidation.
Yeah, it can be a really helpful way to like simplify things, make those payments easier to manage, maybe even save some money on interest.
Okay, that sounds interesting. So how does it work? Like who's it good for?
So basically, debt consolidation, it's like you take out one new loan to pay off a bunch of other debts, like credit cards or maybe personal loans, and then you just have one payment each month. Makes things a lot easier to keep track of. And if you can get a lower interest rate on that new loan, well, then you could actually save money in the long run.
So it's like you're streamlining everything and maybe even, outsmarting those high interest rates.
Exactly.
But are there like downsides? Things people should watch out for?
Yeah, good point. The source, it definitely says to be careful. You got to do your research before jumping into a consolidation loan. You want to make sure you understand all the terms, the fees, all that stuff. And don't just focus on getting a lower monthly payment. Sometimes they do that by stretching out the repayment term, which can actually end up costing you more in interest.
So it's like,
Yeah.
got to be strategic.
Yeah.
Speaking of being strategic, the source also mentioned balance transfer offers as a way to manage debt. How do those work?
Oh, balance transfer credit cards. Those are interesting. They usually offer like a low interest rate or even 0%, but just for a certain amount of time. So the idea is you transfer balances from your high interest cards to that new card, and you try to pay it down, as much as you can while that low rate is in effect.
Okay, so it's like you got to be quick.
Yeah, there's definitely a time limit there.
What should people watch out for?
Well, like with anything, read the fine print. Make sure you understand how long that promotional period lasts, what the fees are for transferring the balance, and what happens to the interest rate once that, introductory period is over.
So it's a little bit of a, I don't know, a financial game. Got to play it smart.
Yeah, you got to be smart about it.
Beyond all the strategies and stuff, the source also talked about, like the mental side of debt, which I thought was really interesting.
Oh, yeah, that's huge. Debt, it can really weigh on you. It can even affect how you make decisions. The source suggested, trying to reframe how you think about debt. Instead of seeing it as this awful burden, try to think of it as a learning experience.
Okay, so it's like turning a negative into a positive. You make mistakes, you learn from them, and then you move forward.
Exactly.
I like that. Well, we've covered so much in this deep dive. Budgeting, saving, investing, protecting what you've earned, managing debt. I don't know about you, but I'm feeling like way more confident about all this personal finance stuff.
Me too. I think the big takeaway here is financial freedom. It's not about being perfect with your money. And it's definitely not about, depriving yourself. It's really about, making choices, conscious choices that fit your life, your values, what you want to achieve.
Yeah, it's about building a life you love. And remember, you don't have to figure it all out on your own. There are so many resources out there, books, podcasts, courses, all sorts of things.
And don't forget, there's a whole community of people who, are into personal finance, who want to learn, who want to share what they know.
So to our listener out there, take a deep breath. Remember, you got this. You have the power to create a life you love, a life where you feel good about money. Thanks for joining us on this deep dive.